Hey, this is Dr. Gold. I just wanted to take a couple of minutes here to go over one of the a more actively used resources for financial news and tracking of information related to investing, which is Yahoo Finance, which you can see here on the screen. For those of you who are very familiar with this site, what I'm about to talk about will be of little interest to you, although you may learn some new things here or there if you care to continue listening. This video is geared more toward the novice investors that we might have in the class where, the stock market challenge might be, sort of new to you and, you don't really know where to go about finding information or accessing data to help you to understand whether or not investing in something might be worthwhile or not. Well, here you've got a website that has information about the major market indices. You can see here the S&P 500, the Dow Jones Industrial Average, and the NASDAQ or over-the-counter markets. And then underneath are some of the more important commodities like crude oil prices at $60 a barrel and gold, and here's the euro gets you $1.13 in US dollars. And then the 10-year Treasury bond interest rate. This is the rate of interest that the U.S. government has to pay an investor who's willing to lend it $1,000 for 10 years. 2.28% is one of the lowest rates historically that the U.S. government has had to pay to borrow money. And many people feel that there's going to be a trend upward in interest rates over the next 5 to 10 years. As a result of that one perception, there are many, many different things one could do to capitalize on that financially. If you think that interest rates will go higher, there are different types of investments. There are things called exchange-traded funds. There's different ways to capitalize on rising interest rates so you can make money during that type of trend within the markets. If you're ever curious about a particular stock, like here we see news about Facebook, they're in some sort of minimum wage fight, and you want to kind of look up more information about a company, if you go over here to the quote lookup box and you just start typing in the name of any company, let's just pick Facebook in this example, and you type in, like once I typed in face, there it found Facebook underneath of it, and the ticker symbol is FB in case you didn't know that. So you click on that, and it brings you to a more detailed page about Facebook Corporation. There's lots of information right here on the front page. Most of it are different data points. For example, the current share price of one share of stock of Facebook, where the stock has been trading today between $77 and $78 a share, what the range has been over the past 52 weeks, what the volume is, how many shares of Facebook stock have transacted today, and what the average daily volume is underneath of that. So it's trading at a slightly lower activity rate than the average volume. The market capitalization is calculated by taking the share price, $78 a share, and multiplying that by the number of shares outstanding. Sometimes people like to look at market capitalization when comparing companies within the same industry. Some people like to invest in smaller capitalization companies because they perceive them to be higher growing, faster growing companies. But of course, there's more risk involved with that. Other people who are risk averse but maybe want to invest in larger cap companies that are more stable, like a Coca-Cola type of company, and so on and so forth. Another important thing to look at is beta. You can see beta over here. Beta is a measurement of the level of volatility that the stock exhibits. So it's also a measurement of risk as a result of that. So when, for example, a company has a beta of 1, in this case Facebook has a beta of less than 1, a beta of 1 implies that if the stock market is up, let's say 2 or 3%, the stock with a beta of 1 should be up close to 2 or 3% as well. If a company has a beta that is higher than 1, that means that it's more volatile than the stock market. So if the stock market's up 1% and your company that you own has a beta of 1.5, it's likely that your stock will be up more than the market. Of course, that's true when the market's down as well. So if the stock market's down 1% and your stock has a beta of 1.5, there's good chance that it will fall more than the market. So some people like high beta stocks, some people like low beta stocks. Typically, more conservative investors are looking for lower volatility companies that will allow them to sleep at night and not have to worry as much about their investments. To get more detailed information about any of these companies, I don't have the time to go into all of the detail here on the left-hand side, but there's so much information. For example, if you go to competitors, you can quickly see who the primary competitors are to Facebook, and you can see on this table Google, Microsoft, and Twitter are considered to be primary competitors to Facebook. Now, you might also throw into that category LinkedIn, which is a social network for professionals, a publicly traded social network for professionals. And it has here an easy way in one table for you to compare and contrast lots of different data points, market cap being one of them, how fast a company is growing in terms of their revenues every 3 months. So clearly here, while Facebook is growing at a very, very fast rate, their sales are growing at 42% every 3 months. That's half of the growth rate for Twitter, which is exhibiting quarterly revenue growth of 74%. And then, of course, in the middle, you can see that Microsoft and Google, which are growing at much slower rates, that should make sense because their overall revenues are much higher, right? Like right underneath of that, if you look underneath Google, you can see that Google's annual revenues or sales are $67 billion, and Microsoft's are $95 billion. Twitter's like $1.5 billion. So it's always easier to grow off of a lower base than once you've reached a higher level. And that's just something you probably already know, but you have to be careful when you read too much into numbers. But I will say that lots of people do look at quarterly revenue growth and try to catch lightning in a bottle before the stock price goes up. Because in the case of Twitter, let's say, if you click on Twitter, it'll take you to that page. You'll notice something sort of interesting on the Twitter page. You'll notice that Twitter does not have a positive earnings per share, which means that they're actually losing money per share. So the question, of course, is why would somebody buy Twitter stock when the company's losing money? And the answer is because Twitter's sales are growing at such a fast rate that investors purchasing Twitter stock today are speculating that eventually that high rate of sales growth will convert into a profit. And once that happens, everybody else who's sort of standing on the sidelines saying, oh, Twitter's too risky for me, I don't want to invest in it until it actually turns a profit. Once it does, all of those people will come rushing into the market to purchase Twitter because they'll feel like it's a safer investment, and then it'll push the stock price higher. So for the people who are willing to take the risk of purchasing Twitter stock, say now, if that happens, and I'm not advising you to buy Twitter, I'm just using this as an example. I just want to be clear on that one so you all don't hate me if you buy Twitter and it goes from 37 to 31. But let's say Twitter does go up and then they turn a profit. Well, then all of a sudden all these other people are going to want to buy it, and that will cause the stock price to go up even further. Another interesting thing you can do is if you look at the chart of the stock over here on the right and you click on a more detailed view of the chart, one of the things you can see here is that Twitter's stock price has plummeted recently, and that was because they had a very, very bad earnings report that was disappointing. You can also compare any company, let's take Twitter as an example, with let's just say the S&P 500. You can see here that Twitter was outperforming. Twitter's the blue line and the S&P 500 is the red line. Twitter was outperforming the S&P 500 when it first became public, and ever since then it's essentially been underperforming the market overall, especially recently. If you want to compare Twitter to another company, you can do that, but the tools that are available in terms of graphing and being able to see how one company's perform relative to another is very, very powerful. If you go also over to the left-hand side and you click on the profile of the company, and this obviously gives you some useful information, tells you about the company, in this case where they're located, and what sort of business they're involved in. And then you can see here the pay scale of the key executives. There's Jack Dorsey. He's one of the co-founders of Twitter, and he's like a quintessential entrepreneur. And you notice there that his annual pay as the chairman of the board is $0. Doesn't take any money. Other executives are earning, in the hundreds of thousands of dollars. That's because Jack Dorsey's worth billions because of Twitter and probably doesn't feel the need personally to take any kind of salary. If you compare that with Facebook, if you're just curious about that and you're like, well, okay, well, what does Mark Zuckerberg earn? What's his wage? And you go to the profile for Facebook, same thing, it gives you information, and here you see that Mark Zuckerberg is earning $610,000 a year, which pales in comparison to other executives there. Like you've probably heard of Sheryl Sandberg. Sadly, her husband recently passed away, but she's very formidable business leader within the tech community, but just in general in terms of advocating for females in the workplace. She earns $1.2 million. I've never heard of Chris Cox, but he's the chief product officer, and he's making basically more than twice as much as Mark Zuckerberg. Of course, Mark Zuckerberg has a lot of stock, much more than anybody else in the company. So it's just personal choices there. The other thing you can do is look at insider transactions, or even major holders, like who are the primary people that own Twitter stock, or in this case, Facebook stock. Well, there you see Sheryl Sandberg owns 5.2 million shares, which is a lot of money when you multiply that by $82 per share. And then some other folks here, and these are some mutual funds that own it, and so on and so forth. There are financial statements. You could look at the profit and loss statement for Facebook. And you can kind of look through the numbers there and calculate some financial ratios if that's something that you would like to use in terms of being able to predict or try to predict what the future will be for Facebook. There's the balance sheet, which of course is a snapshot in time of a company's assets, liabilities, and of course the shareholders' equity. So this gives you a kind of good look into how the company finances its asset purchases. It has total assets of $40 billion. We know that this is in billions because it says up here all numbers are in thousands. So you got to add 3 zeros to all these numbers to get the actual numbers. When you look at how Facebook has financed the purchase of $40 billion in assets, well, it's purchased $40 billion, only 10% has been through borrowing money or through some sort of liability debt offerings, whereas most of the purchases of assets have come through equity in the business, investors, and so on and so forth. So sometimes people view that to be a positive sign, sometimes a negative sign if there's too much debt on the balance sheet. But these are all things you can do to calculate the current ratio and the quick ratio and lots of other different ratios that you probably learned in financial accounting and will learn once again in this class. So that's a quick tour of Yahoo Finance. I hope that that's at least encouraged you to pursue looking at this a little bit more often. It's a great starting point or launch pad for doing some research on different companies. It also has links to lots of news articles and information that's occurring in real time during the day. Of course, there's some advertisements kind of, thrown inside of it. But I encourage you to all look through this. I hope this video has helped you to dig a little bit deeper into some of the information that's available to you. And I'll be doing more of these videos over the course of the semester to try to help you with different topics and different resources that I think might be able to help you do well on quizzes and on the exams. I'll talk to you soon.